Good morning, everybody. This is the live market open for January 11th, 2017. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. And as usual, today we'll cover recent developments in markets, talk about various charts and levels, discuss the upcoming events, quite a few, and our currency of the week is Aussie dollar. Then we'll, of course, talk about the week ahead, very busy, and wrap up the show as usual. As always, your questions are more than welcome. If by any chance you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-live-video. Okay, what's going on in markets? Well, last week the US dollar was hit by the Fed minutes. Let's talk just a bit about that to understand what's important in that context. Okay, so usually the Fed meeting minutes, that's usually quite a boring event, okay? I mean, it's just what the members were talking about in the meeting. Last meeting, we had all the news out. We had a rate hike. We had the dot plot, the new forecast. We had the press conference by Janet Yellen. So let's do a quick rewind. In December, the Fed raised rates. They also told us that in 2017, they'll raise rates probably, according to the dot plot, according to their forecast, 3 times, an upgrade from twice. Sorry. And this pushed the dollar higher. Now we learned last week in the meeting minutes that at least half of the members based their assessment on more fiscal stimulus from the new administration. Okay, that means that the Fed members were aligned with markets in that sense. But usually the Fed is quite boring, quite cautious, waiting for the data to appear, not for election promises. So that was a bit surprising. So if part of the dollar rally was based on these assumptions, some of the hot air came out of the dollar rally. So that was 1 week ago. I'm talking about it now because it still has an impact, because the US dollar is not so dominant. Okay, when we talked last week on the morning of the Fed minutes, we talked how the dollar began 2017 very strongly. Euro dollar reached new 14-year lows. This has changed, okay? In the meantime, of course, we have lots of other events in markets. So back to the slide. We had the non-farm payrolls that came out better than expected, especially wages. We'll look into the data soon. And that helped the dollar. Over the weekend, we had fresh Brexit worries. Prime Minister Theresa May of the United Kingdom gave an interview, and she prioritized immigration. That means less access to the single market. And these worries of less trade hurt the British pound. And today we have a press conference by Donald Trump, and markets are getting ready for that. Lots of talk about, well, first press conference in nearly 6 months, and we don't know what he's going to say regarding trade, which markets fear, and regarding fiscal stimulus, which markets expect. Okay, so let's look a bit into the data. Non-farm payroll is the most important piece of data we had in last week's busy week. It came out at 156,000 jobs gained, below expectations, but we had upward revisions worth 44,000, so that was good enough. And more importantly, wages. We talked about how wages are important last week in the preview, and we really got it. 0.4% better than expected, 0.3 and 2.9%, the highest rise in wages since 2009. So we're seeing that job market is heating up, and it also pushes wages higher. And this allowed the dollar to recover. Elsewhere, this week, we had mixed data leading up to the NFP, a miss in the ADP NFP, the non-manufacturing PMI. Services sector is, in theory, doing well, but not hiring enough workers. Indeed, the headline figure was not that strong. In Canada, the jobs report beat expectations. The unemployment rate ticked up a bit, but that was thanks to a rise in the participation rate. Anyway, good news from Canada. Eurozone inflation, worth stopping on this for a moment. It rose to 1.1% on the headline, thanks to jump in German inflation. And the core, finally core inflation, it moved from 0.8, it was stuck there 5 months, to 0.9. Okay, this can be a one-off, but the Germans are already worried. Retail sales in the Eurozone fell 0.4, so it's not all good news. In the UK, on one hand, we have political news, and political news dominates. On the other hand, the figures there are positive. So we had the services PMI, for example, the most important one, rise to 56.2% points. So all in all, I think the UK, the big story for the UK is that the economy is doing well, but worries about Brexit, political worries, weigh on the British pound. Okay. And to complete our data set for this morning, well, we had from Australia once again, and we'll talk more about Australia later on. Retail sales missed with 0.2, and inflation, Chinese inflation, is heating up with the rise, especially in PPI, in producer price index. So prices of commodities, for example, are rising. That's good for Australia. Hopefully it doesn't heat up too much. And yesterday's US jobs report was not that exciting. This week we had less important figures. We do have more important figures later on. And of course we have Trump later on. Before we move to talk about events in markets, let's look at the charts. Many of you are here for the charts. We'll start with major pairs. So this is an outlook for technical lines for major pairs for the second week of 2017. We'll start with euro-dollar. Euro-dollar, basically where it closed last week, where it closed 2016. We did have a lot of action in between, of course. So currently 1.0554. So above this 105.20 line, which helped it, provided support, but under the highs there of 106.50. 106.50 was the flash surge, if you wish, seen in the holiday week between Christmas and New Year's. Below 105.20, we have 104.60, a little bit weaker than it used to be. This was the March 2015 low, provided support to the pair. And further below, we have last week's low, which is the lowest in 14 years. 14, yes, from 2002, 2003, and that's 103.50. On the road to parity, which doesn't look that certain, well, because the euro is recovering, we have 101.50 as the last barrier on the way down. Looking up, we have 107.10, but as you can see, the current range, if we look at the wider scope, is 103.50 to 106.50. And today, for example, our range is only 30 pips so far. Let's move to the pound. The pound did suffer quite a downfall, not only against the US dollar, which we see here, but also against other currencies. So currently 121.57. It fell below this support line of 122, a round number. Look at the double bottom of 122. And 121 is the next level of support. Yesterday we reached 121.07. Okay, below this line, we have the psychological round level of 120, but I wouldn't say it provides too much support. If we fall again to the 120 handle, I think we can easily fall below it as well. To the upside, 122, 123, 123.80, which was a swing high, and then, well, 124.30. Let's continue to the Japanese yen. This pair does reflect the weakness of the US dollar, okay? So if we talked about the weakness of the pound against the dollar, it's of course weaker against the yen and against, well, the dollar is not the star at the moment. So currently, dollar yen is battling the 116 level, basically shattering this line. This used to be a strong line of support and resistance because it was the line in the sand for the Bank of Japan. But recent price action has been very, very choppy, okay? We have here support at 115, another round number. I'm not sure this support is very strong technically. It is, of course, a very round number. Under that, we have 114.30 and 113.40. To the top side, we have 117.80, but this looks a bit far out at the moment. And of course, 118.80. So after a huge rally in dollar yen, let's zoom out for a moment. We do have some kind of retracement or consolidation in recent weeks. Okay, since the beginning of the year, we're seeing hesitation there. Moving to commodity currencies, dollar CAD, the excellent jobs report in Canada did help, and also the Canadian dollar is defying oil prices. So for a change, the Canadian dollar is certainly showing us some strength. 132.25 is the current level. Resistance 133.20, 133.80, and 134.60. The pair is showing better technical, better technical behavior, but at least in the higher levels. Support here at 131.80 and much lower support at 130. Okay, so these are the current levels for the Canadian dollar. All currencies are now in narrower ranges. Let's continue to the Aussie dollar. Here we had a recovery. Okay, so this is a very strong line here on the bottom, 71.60. The pair made several attempts to break lower, didn't make it, was capped there. Next line here is 72.50. 73.10 is the next line I have here, but it's not as strong as it used to be. More choppy trading. We currently topped 73.75, which served as support for a long time. The next level here is 74.50, and then, of course, the round number of 75. Aussie dollar used to be one of my favorite technical pairs. It is now much more choppy. Okay, continuing with the Kiwi dollar, trying to climb above 70, but it's a struggle. Okay, we have here 69. The 70 level is the battle line. 70.40 is the next line of resistance tested in the past few days. It's followed by 70.90 and 71.40. To the downside, we have 68.80 and 68.60. Well, very close range over there. Let's see who wins the battle over 70. And completing our major pairs, let's talk about dollar Swiss briefly. Remember, the Swiss National Bank intervenes to weaken the Swiss franc, especially against the euro, but also it of course has an effect against the dollar. Currently 101.60, resistance 102.15 and 103.30, support at 100.60, and of course the very round number of parity. So that was their major pairs for the second week of January. Let's talk now about crosses, technical lines for crosses for the second week of January. So we'll begin where we finished off with the majors, with the Swiss franc, euro Swiss franc, moving off the bottom. Look at this extremely choppy chart. 107.24 is the current level. 107.10, I would say some kind of support, followed by 106.60. The Swiss National Bank would prefer a range of 108 to 110. These are levels to watch to the top side. Euro pound, quite an amazing move here. We made a very strong rush to the top side on the weakness of the British pound, reaching resistance there at 87.70. Okay, now falling back down, support here at 86.60, followed by further support at 86. And then we have the 85 line, 84.50, 84.20, and 83.30. All of these were lines in the recent past. Euro pound is showing us better technical behavior than in the past. Anyway, we're on higher ground now. The main driver is the weakness of the British pound. Political news from the United Kingdom. Euro yen, much more choppy. 122.45 at the moment. Support there at 122.40. Followed by very strong support, almost a double bottom at 121.60. Resistance 123.23, 123.80, and 124. Ranges have been a bit more limited, but remember that in December we had much bigger ranges in euro yen. And now let's take a risk with the dragon, pound yen, also known as the dragon or gepi. Currently 141. You can see here a big downfall thanks to the weakness of the pound. So support awaits at 140, the round level. We haven't breached that yet despite the big fall. Resistance 142.12, which was a line at very last days of December of 2016. 143.50, not as strong as it used to be, followed by 144, and 145.40 is a strong line to the upside. If we have a big recovery in the pound, a bigly, as Trump says, 148.50 is the next level to watch. And we'll conclude our crosses by moving to a commodity, the number one commodity, black gold, also known as oil. WTI crude oil had a major fall. We're back to levels under the 52 level, which kept the pair currently 50.94. So we're still above 50, which is around psychological level. But in technical, if we look at the technicals of WTI crude oil, we find that the 52 level was this double top here. Okay, we did manage to rise above it at the end of the year thanks to that OPEC meeting, reached a new high 55.20. Had this range trading between 52 and 54.50, 52.30. Now we're back to the lower range. 50 is around the number, but real support awaits only at 49.50. Next level of support is 46.50. So oil prices, if you want, maybe are going 2 steps forward, 1 step backwards, but certainly not strong, not a clear uptrend as it seemed a few days ago or late in 2016. Okay, so this concludes our technical segment for the crosses. Of course, questions are welcome. And good morning, Viprala. Say the chart is not clear. Well, try to make it clearer next time. I hope I did zoom in enough. Anyway, questions, comments always are welcome. Let's continue. I hope now everything is clear, at least this slide. Let's talk about the upcoming events for this week, especially, well, let's begin. So today, Wednesday, we have industrial output in the UK and trade balance at the same time. UK has a big trade deficit, but this doesn't have too much of an impact on the pound. At 3:30 GMT as usual, oil inventories, but the big event for today, let's put it in bold, is Donald Trump's first press conference in, if I'm not mistaken, 160 something days, nearly half a year, okay? So during the campaign, Hillary Clinton was criticized for not holding a press conference for a very long time. Trump didn't do that either. Of course, Trump has his Twitter account to tweet about everything. Lots of things in the press conference to talk about. The main political news is the Russian hacking scandal. Trump and Obama were briefed about that. The latest revelation is that maybe, or maybe not, the Russians also have some dirty material about Trump's business and personal stuff, something they could use against him. But this is not clear. What is clear to the US intelligence agencies is that Russians were involved and wanted Trump to win, wanted Clinton to lose. These allegations, of course, will weigh. But for markets, markets are more interested in two main topics. That's fiscal stimulus. Remember, the dollar rallied, and well, Fed even raised its forecast because of expectations for more fiscal stimulus, more infrastructure spending, more military spending, no cuts in Medicare, and that's a positive thing. If Trump backtracks on that, that's bad news for the dollar. But if he supports that, that's good news for the dollar. The second issue for markets is trade. Trump tweeted recently about, well, tried to threat US companies, especially car companies, to remain in the United States, not to move factories to Mexico. Okay, but the bigger worries about our relations with China and in general NAFTA. Let's see if he talks once again about these issues, or he tones down, trying to be fair with everybody or something like that. So these are the main topics. Of course, there will be also, apart from the Russian hacking allegations, there will be talk about repealing and replacing Obamacare and many other things. It begins at 4 GMT, probably be broadcast on many networks. I expect markets to move, of course, the US dollar especially against the yen. I have no idea if it'll be good for the US dollar or bad for the US dollar. Trump is very erratic and tends to contradict himself. We'll see quite soon. At the same time, in Capitol Hill, we have the confirmations of his cabinet. Especially what's interesting for markets is Treasury Secretary Mnuchin, and but everything will probably be confirmed. That's what usually happens. Let's continue. This is, of course, the big event for today. Trump. Tomorrow, we have the ECB meeting minutes. So this is important this time because the ECB decided to extend its QE program to the end of this year, to the end of 2017, but to begin to reduce bond buys from April and to change the bond limits. Let's see if they were more optimistic or more pessimistic about inflation, about the economy. As tomorrow, an hour later at 1:30 GMT, we have jobless claims in the US like every week. We have speeches by Fed members. This could impact market. Just watch out for that. Maybe it'll be nothing. And import prices to show us inflation or how the strength of the US dollar dampens prices of imported goods. But the really big day for economic indicators, of course, politics is always in the background. We have on Friday, first of all, a speech by Yellen. She might not talk about monetary policy, but it's still worth mentioning it because she's, of course, the most powerful central banker in the world. Chinese trade balance. Let's see how the global economy is doing. You can ignore the Chinese trade surplus, but look out for the level of exports and imports. More is better, more economic activity, better for the world, better for Australia. China is Australia's #1 trade partner. And the big event for Friday is in the US session, is the retail sales. Of course, the US economy is a lot about consumption. This is accompanied by the PPI, Producer Price Index. Let's see if inflation in the pipeline, inflation that begins from producers and reaches consumers, if it is on the rise, and consumer sentiment will have the last word at 3 GMT. This is consumer sentiment from the University of Michigan. We had a good read from the conference board recently. Okay, so this concludes our upcoming events for this week. A week that began quite slowly is heating up with Trump and later with retail sales. Yeah, okay, so I think I answered the question about Trump. I see here a question. How should you... No, I didn't really answer it. What I did say is that I don't know what he's going to say. But again, the main topics, as I mentioned, are trade. If he's tough on trade, it's bad news for the US dollar. Well, bad news for the world. More importantly, fiscal stimulus. More fiscal stimulus is better for the US dollar. Markets are relying on fiscal stimulus. If he affirms what he said in the campaign trail, good news. If he tones it down, it's bad news for the US dollar. Okay. Anyway, dollar yen is the currency pair to trade, and in this case, of course, but the dollar will move across the board. All right, so now let's continue with our currency of the week, the Aussie dollar. Okay, used to be one of my favorites, not so much anymore, but still an interesting currency pair. So the Australian economy suffered in the third quarter. It had a rare squeeze, a rare contraction of the Australian, well, a recession is defined as 2 consecutive quarters of negative growth, of a contraction of the output shrinking. And this hasn't happened since 1991 in Australia, 25 years of growth, okay? But we did have some slips of 1 quarter at a time. This happened now in the third quarter. It's probably temporary. It will probably not turn into an official recession. But you should watch out for that. Chinese manufacturing, that's on the rise. China in general is moving from, well, soft landing, fears of a hard landing to renewed growth, more government stimulus. Manufacturing is on the rise. We had good news from the Chinese PMI. Another factor helping Australia is political stability. We had a succession of prime ministers many changes there. Now we have Malcolm Turnbull as Prime Minister, and he was re-elected. So we have lots of political stability there. Stability also comes from the central bank. The RBA, with its new governor, Philip Lowe, is in neutral mode for the time being. They do not intend to cut rates or to raise rates. So lots of stability in Australia, well, apart from that GDP scare in Q3. But in general, that could explain some of the stability also in Aussie dollar against the US dollar. What's going on in the US? Well, high uncertainty, of course, regarding Trump. We'll get more from Trump today, doesn't mean less uncertainty. But the economy is looking good. Non-Trump payrolls, growth prospects, everything looks on the up and up. Fed will likely raise rates twice, not 3 times as they say, but a lot depends on this guy here on the bottom right, Donald Trump. But so lots of uncertainty, but also the US economy is doing well at the moment. Aussie dollar had a relatively boring 2016. It became less predictable in terms of technical trading. It didn't live up to, well, trading in previous years where it liked rising or falling in clear trend lines. It didn't respect that much technical lines of flat lines of resistance or support. Okay, and I hope it will change in 2017. I'm talking today about Australian dollar. Again, I don't have a clear bias about where it's going. The Australian economy looks good, but also the US looks good at the moment. But I want to talk today about the Aussie because there's a really busy schedule. So on Friday, as we mentioned, there's the Chinese trade balance. Australia cares more about imports, okay? So focus, if Chinese imports are on the rise, that means that this includes imports from Australia or potential for more imports from Australia. Next week on Tuesday, we have the Chinese GDP and industrial output. Now, I know that many don't believe Chinese official data, especially GDP, but it still has an impact on markets. And next Thursday, we have the Australian jobs report released monthly. Previous reports have been quite positive. The RBA, the Reserve Bank of Australia, is on vacation in January, but they're back in February after, well, not talking to us for 2 months. It should be interesting. What's going on in, let's just to conclude this segment, let's talk about the Aussie dollar chart. Let's look at it in a wider perspective. I hope this chart is clear enough. Anyway, this is the Aussie dollar since here we are throughout 2016. So in 2016, we did see low levels here of 68.50, even 68.30, and we went up all the way to 78.40. But that was at the beginning of the year. Things were more exciting then. And since then, we had narrow ranges. So we had a low here of 71.50, okay, later on, and then a high that didn't reach the previous highs. So a narrowing range here. Towards the end of the year, we did have a downfall from these highs of 77 all the way to 71.60. So bigger move of around 600 pips. Since then, we had sort of healthy corrections, but the trend, as far as I see it, still remains to the downside. A lot currently depends on Donald Trump. If the dollar does strengthen in Q1, we could see the pair rising a bit more. The pair falling, extending the downtrend. But if we don't have any major news from the United States, I think Aussie dollar could stabilize. It has good fundamentals, and it could move back to the higher end of the range. Okay, so this concludes our special, our currency of the week, the Aussie dollar. And now let's preview the week of January 16th to January 20th. Okay, this is already a much busier week in terms of US economic indicators. On Monday, it's a US holiday. I think it's a President's Day or something like that. Anyway, not a really important one, but liquidity will be a bit lower. It's not Christmas, not Easter. not Independence Day, but still worth mentioning that liquidity might be a bit lower. On Tuesday, very busy with Chinese GDP, and they release also other figures such as industrial output and retail sales. The world wants to see strong GDP, strong industrial output, and also strong retail sales to reflect the shift that the Chinese economy is doing from being the factory of the world to also consuming, from industry and investment to services and consumption. Okay, again, there are doubts about the veracity of this report, but it's still worth noting. A busy week next week also for the United Kingdom. We have the inflation report. Inflation has been rising because of the weakness of the British pound. Let's see if this continues. And in the Eurozone in Germany, we have the ZU economic sentiment, which has been relatively stable of late and has less of an impact, but it can always surprise us. And also on Tuesday, we have the Empire State Manufacturing Index in the United States. Let's see if there is more optimism about manufacturing. Trump promised to bring jobs back to America. And then for those trading the Kiwi dollar, we have the milk auction. Things get busier on Wednesday, very busy day. Again, a top tier figure from the UK. So Tuesday it was inflation. On Wednesday, it's the jobs report. And the jobs report, we have to note a few things in the UK. On one hand, the unemployment rate is very low. Wages are rising steadily, above 2%. But jobless claims, known in the UK as the claimant count change, that has been a bit worrying because jobless claims are rising. It's not really good news. We have the final Eurozone CPI, final inflation figures. Usually they are confirmed, but well, occasionally we have surprises there. Inflation figures are also released in the United States. CPI, it will tell us if the US dollar's weakness is weighing on inflation and could push back rate hikes by the Fed, or that we have rising inflation, a global trend, and also industrial output from the United States. For those of you trading the Canadian dollar, it's a busy day, Wednesday as well. We have the rate decision by the Bank of Canada. In theory, they are neutral, but slightly dovish. There is a chance of rate cuts. And oil inventories, as always, on Wednesday. Thursday, it's getting even busier, starting early with the Australian jobs report. Again, this is a busy week for Australia as well. And the main event is the ECB rate decision. We'll preview that in full next week, but let's talk about that a bit now as well. So this week we have the meeting minutes from the previous event. Next week we have Mario Draghi. That's one of two big events. On Friday we have a bigger one, but the press conference, no changes expected with the ECB. They made big changes last time, but let's hear from him what he thinks about inflation. Does he see it as rising now thanks to the weaker euro, thanks to rising oil prices, and thanks to the ECB? They always like to pat themselves on the back. And if inflation is rising, maybe indeed the ECB will stop buying bonds at the end of 2017. But if they're still worried, and he's usually dovish, and he wants to push the euro lower, he'll express more worries and an open door to more action. In general, I expect the ECB to make significant announcements only after the summer, more or less, because they made a big move. But this is his first opportunity to tell us now in January, at the beginning of the year, if there's a chance for changes in monetary policy much earlier than that. So that's your mini ECB preview. Of course, we'll have time to talk about that next week as well. Yeah, that's the ECB rate decision. I see here a question before we'll continue. Euro dollar. Well, I'll finish the segment about. Yeah, okay. So I see here a few questions about euro dollar and Aussie CAD, and I'll finish the segment about next week's events, and we'll answer all the questions. Okay, so as aforementioned, we'll get back to this preview for next week. Jobless claims also at the same time, like every week. Housing starts, building permits. Again, the main event for Thursday is the ECB. But if all the US data goes in one direction, it should have an impact. Sometimes housing starts go up and building permits go down. So that might cause a bit of confusion. Anyway, I would ignore the US data on Thursday. Friday, we already have data coming from elsewhere. Retail sales in the UK, the third big release in the UK. And then we have Canadian CPI and retail sales for those trading the Canadian dollar. We have a strong finish to the week. But the second big event of the week comes late on Friday. That's when we have a change of power in the United States, when Trump actually enters the White House. So the elections were held back at the beginning of November, but new president gets into the White House, into the Oval Office, only in January 20th. That's the tradition in the United States. And let's see what he does on day one. Now, the actual inauguration is scheduled for 12 p.m. over there in Washington. That is 5 GMT. So that's basically when European markets close. We'll have, of course, the ceremony where he's sworn into office. But the main, and he might have, of course, the acceptance speech, which could have some impact. But markets are looking more to see what he will do on day one. He promised to do many things on day one. Now, this is a promise he will probably keep, because also other presidents made big announcements, signed executive orders on day one. So I do expect some kind of action, and that might happen after markets close. So we will not have, if you are trading late on Friday, you might still have a chance to remember that liquidity is low and markets could overreact to Trump. So that will be a very, very interesting, but also dangerous close to next week. Okay, we'll talk about Trump's inauguration and Draghi, of course, also in next week's show, because the show is on Wednesday and these big events are on Thursday and Friday. Okay, so that concludes our preview for the week of January 16th to 20th. Now let's see a few questions. So we have questions here about euro dollar. Let's talk about euro dollar. First of all, in the bigger scheme of things, euro dollar had a lot of range trading during 2016 and then had a big downfall. The election of Trump is the main event here, where it almost reached 113 and then collapsed to 105.20. Then we had some kind of a recovery, and then we had dovishness from the ECB, and then hawkishness from the Fed. So this monetary policy divergence, with a stronger US dollar and a weaker euro, sent the pair to 14-year lows at 103.50 and then 103.40 last week. Okay, technically the big levels to watch here at the moment, as I see it, 106.50, 107.10 used to be an important line to the upside, and 108.60. Okay, to the downside, 104.60 is still relevant, 103.50, and on the way to parity at levels last seen in 2002, we have 101.50 and of course parity. So I hope this answers the question about euro dollar. And now a question about Aussie CAD. Aussie CAD is a pair I haven't visited in quite a long time. I will say they're both commodity currencies. Let's look at the Australian dollar against the Canadian dollar. All right, so we had a big rise there until that was the peak came at the beginning of November, just after the election of the United States. And since then, the trend is clearly to the downside. Current level is 97.70. Let's draw a few lines here. This is the daily chart, what you're watching here. So I see support here at 96. Okay, a round number. Yes, we had a dip under that. But look at this 96 level. It also supported the pair back in February last year. So 11-month low here. To the top side, I would draw a line Yeah, this is good assessment here at 98. Okay, so 96 to 98 is the current range. Currently, we're bouncing off the lows. Looking higher, we have here the 99.20 line. Of course, the round number of parity. But remember, this is a cross. This is not a regular pair, so I'm not sure that parity has such a big importance because these countries don't have that much trade between each other. 100.50 and 101.40 are the next lines to the top side, but that's a bit far off. Let's take another look to the downside on Aussie CAD, and I would say that, well, the big line here, all right, the big line in the sand is the 2016 low of 93.30, but that's far off. I would say that it's a wide range between 93.30 and 96. Anyway, the current range is 96 to 98. And another question, what's your opinion on euro pound? Well, euro pound, both currencies are in trouble for various reasons. Well, some of the same reason. The UK exit of the Eurozone, of course, threatens the Eurozone. We had a big recovery in euro pound because of the weakness of the pound. I'm bearish on the pound, but I would say that there is still a chance for parity on euro dollar. That means that at least as long as the US dollar, well, if the US dollar remains strong, it did lose some of its ground, then we might see the pair move sideways. But in general, after at least in a few months' time, I see euro pound as rising because Brexit could weigh heavily on the pound, less on the euro. We could see more stability in the euro, especially after the French elections at the end of April, beginning of May. Assuming we don't have Marine Le Pen as the French president, then we could have a big recovery in the euro and the euro across the board, and the pound could remain weak. Okay, so I hope this answers the question. And yeah, now it's time to wrap up. So this is the wrap up for the live market open for January 11th, 2017. Today is Trump Day. It's a big event. Beforehand, we had the dollar hit by the Fed minutes that assumed too much from Trump, but now we'll hear from the Donald himself. The NFP data in the US has been good. A big rise in wages, 2.9%, and that's positive news. The pound has been pounded quite heavily by political news, despite economic strength in the UK. And today we have the press, as Ford mentioned, the press conference by Trump. That's the big event of the day at 4 GMT. Other figures are a bit less important today. We do have another big event this week on Friday in terms of economic data. We have retail sales in the US, always a big market mover, and Chinese trade balance, also worth mentioning. Today's trading, let's zoom in back to the hourly chart, is quite slow. So we had the European market open, but nothing happened. We're back to a frustrating narrow range on euro dollar, 105.20, 104.60, 103.40 to the downside, to the top side, 106.60, 107.10. Pound dollar, the pound has been hit quite hard. The current range is 121 to 122. Dollar yen, here we're seeing the weakness of the US dollar, support 115, resistance, well, I would say strong resistance at 117.80. Dollar CAD, Canadian dollar, found its fresh strength once again, support 131.80, resistance 133.20. Aussie dollar, nearing the 74 level, 74.50 as resistance, some support there at 73.75, followed by 73.10. Next resistance, next big resistance, 75. Kiwi dollar, battling the 70 level. We began the show under this line. We're currently over this line, but the battle has not been concluded. 68.80 is low support, 71.40 high resistance. Watch out also for the price of oil. Not moving much this morning, but it fell back under the previous double top of 52. Of course, worries about OPEC. Usually, there's an inverse relation between the US dollar and oil. That means weaker oil should result in a stronger dollar. But At the end of 2016, the price of oil moved on its own, and so did the US dollar. Okay, thank you very much, everybody, for all the questions. Thank you for coming to the show, as usual, and thank you, FX Street. As usual, you can watch the show from the beginning to the end once again on FX Street, on Forex Crunch, and of course the separate video clips from the segments we did. We talked about the, currency of the week was the Aussie dollar, talked about the upcoming events the week ahead, and our two separate technical segments, one for majors and one for crosses, if you want more about euro, pound, or whichever currency. So that's it for today. Thank you very much, everybody, for coming. I wish everybody a safe and successful day in markets. Watch out for Trump. I really don't know what he's going to say. Nobody knows, I guess. And it's going to be interesting, that's for sure. Also for markets, not only for politics. So that's it. So that's it for the show. And see you next time. Ciao. Good day. Bye-bye.